years of experience to help you manage your portfolios and protect your wealth. Remember to subscribe, like, and share these videos. Well, folks, we're all trying to stay warm, and we'll see how tonight goes. It's cold all across the country. Let's get into it. Welcome, everyone. Sorry, a few minutes late. Had a technical problem with the camera. Pretty important, I guess. So last night I got some things happen. I got inspired. I am getting very close. I would have had the annual report. Maybe you would have rather had that, but I did a special report on silver, and I think it was very timely, as it turns out. We finally potentially have started somewhat of a blow-off top. I don't know if it'll go across the metals, but I hope that you folks, if you don't get the newsletter, you really should. This was, I think, I don't know how many pages, 3,500 words, but it was really about a lesson in parabolic curves and what happens. And I'm gonna follow up on that because I don't know how many people saw that. You should. Everybody needs to see it. There's another report that I have that's also going through psychology. I told you that a lot of things that we're going to shift here on the channel were more education, and this was a class book. I love it. You millennials, I love you. You guys are doing all the classic mistakes, all the, these overdone markets. You're just giving us a master class, and there's never been as many amateurs in the market as there is right now, which this is, and I'm not trying to offend anyone. What I'm trying to say is this brings out the true human nature of markets. And in this one report that I'm working on, one of the things I point out is the millennials, if you've been around the markets, let's say for 15 years, the only thing you know about the markets is buy the dip. And you've been rewarded most of the times. Never had the opportunity of, if you go back to the 70s, when I first came into the markets, all I heard about was 1972, 1974. And what that was about was, people had Kodak on the books forever. That stock never rebounded. It was the hottest stock around, and it collapsed and it went flat along the bottom. And maybe that's what's about to happen to Bitcoin. I'm not saying it's going to go to zero or anything like that, but it's just not going to rally for a long time. So there's that lesson of psychology. Now this one in silver. I love vertical markets. I was talking to an old buddy this earlier today, and we were talking about some of the moves in crude oil that did this, and they correct very, very fast. And so we saw silver basically have a 16 handle move today, or $16 move, really. That's a huge move, and it didn't close well, but it set up the scenario that I talked about. If you did read the silver special report, could you just give me a thumbs up or something like that? That would be awesome, just so I have a feel for how many of you actually were able to get a glance at that. And also I put in there, let me go to this screen here just so we can I can bring in some context here of what's going on. So what I've got here is the script and some things that I built here that I'll put a cursor here. This is basically a parabolic curve analysis of what goes on. And it's like so amazing where we live right now. I built this in Claude last night, and I think that there's it's so nice to be able to distribute and show this. You can actually modify and play with that. If you click on the in the article that I wrote, I posted that and made it public. There's nothing proprietary in here, but you can also modify this. You can give it a further prompt and play with it. And if you get it all messed up, then you can just go back to the Kendall report, click on it. So I try to put these things in when I come up with these ideas. And there was a market that I remember the most was sugar back, I believe it was 1982. It was just one of these moonshots. I mean, just complete parabolic vertical, well beyond what anyone was predicting or thinking. I didn't really do a lot of the softs, but it was a big story around the time. If we would have had X or anything social media wise, this thing, who knows what would have happened. So the good news, bad news of having X and these things get blown up pretty quickly. And it almost felt like everybody was getting out of Bitcoin and buying silver in the last week or so. It's like, okay, that's not working, so I sell my Bitcoin. I'd love to see how the guy feels that paid 117 and I think 70 cents once was a high. We'll look at it here in a minute. Matter of fact, let me just put it over here. Yeah, it was 117.7. So somebody was the bag man, bought that. We traded. The low was 103, and we went out 101, and we went out at 103. So we're 14 handles. And the reason why I a lot of things I try to do, and I do them on these YouTube videos all the time. There'll be a lesson somewhere that comes up. And I know years ago, back in the pandemic days, when we spent a lot of time together, I had been consistent on this channel. I'm trying to get back fully integrated into the internet again, just to get everything through and start doing some of these educational stuff. But we had lots of opportunity. And I think one of the things that I found is really interesting on this sheet that I built. Down below, I built in the article. I built in the markers to watch for when you're in a parabolic curve and things to look at, so when you're getting close to that top. Because if you're in it, for instance, I don't have it up here, but I can. Matter of fact, let me just put this up here real quick here. Let's go over here. And so I want to go down this trail for a little bit, then we'll get into the normal meeting. So I'm just putting SLV in here. And this is a good example here. It's going to show, I'll blow this up so you can see it. Couple of interesting things that some of you I know always, markets usually fill the gaps. Well, there's a gap in this chart down here at around 77. And it's very interesting. See the last buy here, entry date 5/12 of last year, $29.67. And now it's 98.34. This is SLV, 231% gain. And when you see these charts, this is always the tough part because before these models are going to kick this out, this is a weekly model. It's going to be several weeks from here, and it might end up getting out at 70 or 80. And I just want to go back to the previous page that I was at. Hopefully I can get back there. Oh boy. I may have lost that screen I had up there. All right. Yeah, okay, good. I was able to get back. But what happens a lot of times, and I described this perfectly, in fact, the target for the upside target, if you read that report, that using the weekly, the daily, and the monthly all came up to about 115 to about 120. We printed 117 today. I don't think that's it, but the next event after we get the big wick here. Sorry, I was trying to get set up for this a little smoother so it would run a little smoother, but let's just take our time here. So you'll see here, there's a big wick on, let me get rid of the market grid here. This was the big wick, and one of the markers you watch for is that reversal wick. And then the next event is how well it rebounds. It should get what I call an echo bounce. It should get a bounce. And the key number, the key thing to watch on silver is going to be the next two sessions. If we go out and we take out the bottom of the wick, then we're going to go down to this is, I believe, a 10-day moving, yes, a 10-day moving average. Then that will be the next thing to be challenged. And the other thing to look at here is look at all the algos, what's being forecasted. We actually got a bit of a V top. We're getting a little upturn here. And the next, you can see what the projections are still parabolic. Okay, so this may not be it. This may be just a correction within, but the next couple of days, only if we close under the 10-period moving average would it really signal a possible top in the metal. And so, but look at the algos. Projections are just all down here. So what that should show us the next 3 or 4 days, we'll start to see a rollover. But here are all the, I've got it right here. These are the termination zone. Primary target, 75% probability. I put this out last night before this big spike today, 115 to 118. Secondary target, 120, 125. Extension risk, only a 10% probability to go above 125. So what's interesting about this, the retracement right now, the minimum is to go back to 65, and that puts us back to that gap I was just talking about. So this is a pretty interesting chart to set up. And you can play with, there's a slider that you can play with right here. This is showing the power of this the parabola right here. And I see if I can get trying to see if I can get a number. I can't see it on here. But there's still a lot of power in this parabolic curve, and that's what's being shown over here on TradingView and on the daily chart. You can still see that extension still being projected. All you guys that have these indicators can do this. Okay, this is like you can do this analysis. I literally dropped the chart that you see. I dropped 3 of those in the Claude. I set it up. I did give it a decent prompt. The prompting is important. I knew the right questions to ask to kind of set up where we are, because one of my claims to fame is, when those of you who've been around the channel for a while, you know, I talk about on the news, you get the big spike outside of the market grid, where you get a big spike and you fade that spike. That's part of understanding the parabola. Parabola. That is what that came from, is understanding the math. And if you understand the math, you can do some really cool stuff, even on those short term. That was like on a 1 minute or 5 minute chart where you get those. So that is quite achievable. But anybody, and this is one of my plans, is doing the master classes, is it's going to be about math. It's not going to be one of these things where, and it will be about the indicators and setups and things like that. But when you understand this stuff and you see it, and you've been doing this as long as I have, you tend to respond when you see them. You don't have to wait 2 or 3 days and get confirmations and all that. These things happen like all the time. They happen on a 1 minute, 5 minute charts on an intraday, especially as a day trader or a scalper. You see things of this nature all the time. So, but this is like the perfect setup. But I asked something here of the, I asked Claude to do something for me. And I said, first warning shot, silver opened at 104, spiked to 108, 103, and then the next terminal event was when it went up to 117. Current status, price closed at 104, R1 support. But bottom line, market reached the projected termination zone of this parabol. And this is what we're looking at. There was the rejection wick, the volume climax, and the momentum divergence all appeared in the same session. And like I said, these things are not friendly. When they end, it's all gravity after that. Because think about all the folks that were playing, I've got to get in once it broke over 107, and we saw it spike up to 117, and then they just punished him. The last guy to buy was the bag man, and they just punished him. And these are, it's interesting because I have been living in math quant-wise since 1983, 84, and I try to bring some of these out. I thought this is a great lesson, and I'm going to start tonight with this. We'll get into what about the markets, but the realities here are this is almost classic. Like I said, the next 2 days will be critical. But what you're going to learn, whether you own silver or not, doesn't matter. I don't. Okay, I don't own it. I don't have an axe to grind here. But when you get markets like this, these are learning. This is how you become a really good trader, is you live through these kind of events. I've lived through a bunch of them over the last 5+ years. And these things happen all the time. When they happened, I studied them. I tried to figure out what were the things that happened. And a lot of this is just the math of once these things go vertical like this. There's one last point I want to make, and I made it in the article. So if you didn't read it, go read it. It should be the second post, because I posted 2 things last night. I posted the normal Kindle report, and I posted a special report. I've got a bunch of stuff working, folks. I promise you all this stuff is going to come. It's just been pretty amazing. But this just looked so timely when I was looking at the markets last night. But what happens is this: when you get into a parabolic curve, all of the things that the PPMs are worthless. Any moving averages is worthless, because when you get into this kind of regime in the market, it breaks away from all the normal stuff. It's not trending around moving averages. It's not working within the market grid. All of those things are gone because it detaches and it just goes vertical, and it operates on a whole different set of rules. So read this report. I was really happy of how it came out and the lessons that are embedded in there. And hopefully we can use this in the next several days. We'll see what happens to determine whether there's an extended move. But what was interesting, just to close this out, and then we'll get into the normal session. What was interesting about this is that all 3 levels, the monthly, the daily, and the weekly, all came in to these areas where, I'll just bring this up again, I'll zoom in a bit. They all came into the same areas here. 115, 118, that was hit almost perfectly. 117.7 was the primary target. Secondary target 120, 125, extension 125 plus. It should be able to expand that, but the retracement support levels, this is my point. When you break out of the normal regime of how I talk about, the PPMs are accelerating, and here's the moving average values. This market is not operating in that regime whatsoever. It's completely on this parabolic curve, and then when these things end, it's like the old double wing airplanes when they go straight up and they finally run out of power and they spin at the top and then they just drop straight down. That's what we're dealing with here. There's no, there is one shot where we are right now that we retrace, and it's got to bounce. If it doesn't make a new high here, then the next phase down could be easily 30-40% drop. Just straight down, just like that airplane I just talked about. So anyway, hopefully, I mean, this is one of those lessons, I think, with where we are in the markets today, is that you have to understand this, because I think you're going to see a lot of these type of markets. And just to close out what I was saying about the millennials, they've never seen something other than buy the dip. Bitcoin markets, you can go back, you can think you're a pro because you're around in 2008. You're not. Those weren't pro markets. Those were manipulated markets. And, you know, with massive intervention, the pandemic was the same thing. They just threw, you know, what, $8+ trillion at the market. As I saw Powell talking, and my joke back in those days was, how does the Fed create money? Open spreadsheet, add zeros, save, close spreadsheet. That's how long it takes them to make up money. They don't have to call the printing press guys. They don't have to do anything. They have the ability literally to electronically create those billions and billions of dollars we've seen them do in these crises. And then I remember talking about debasement of the currency and all of that. You know, if you look at, you know, $1980 when I started in the markets compared to today, I mean, it's what, maybe 6-7 times you have to have over what you needed then to live. So this debasement of the currency has happened, all that stuff. Okay, hard stop right here. But read the report. If you don't have, it's free. So you just have to sign up a free account on kendallreport.substack.com. It's $8 a month. You know, get that report. I actually really enjoy. That's one of the things that, number one, I can maintain very consistently, and not have to worry about spending hours. Even though I spend sometimes 3 hours writing some of this stuff, I really enjoy it. So I really want to build up that newsletter. Tell your friends, and like I said, there's lots of good stuff. So finally, let's move on. So come back up. Thanks for your patience on that. Hopefully you find this stuff interesting. So we've got the Fed coming this week. So let's get into talking about our normal market configurations and things that we can expect this week. I for one reason or another, I'm not sure why, but I think the Fed might continue to lower rates this meeting. I think they should have been. I think they're still way behind the curve. What does Trump call late? I forget what he's got a nickname, something about always late Jerome or whatever it is. But they're still behind the curve, and the curve is what's important. The yield curve needs to be much steeper, and we've seen some rebound in the small caps, but I think when you get to the point where I think it should be, where the front end of the curve, not the 2-year, just X off 2-year, don't care about the 2-year. What I do care about is the Fed funds, 1-year T-bills and down. That overnight money is really important. The banks don't run on 2-year money, okay? Banks run on overnight money and much shorter term as far as the collateral and where the bank, where there's internal spreadsheets are running and how they're using money to lever and, you know, borrow short, lend long kind of thing. And, you know, where you're looking at CDs and all that front end short-term money. Uh, so that's why I'm always emphasizing that. I ran a consultancy. I think I had 36 of the largest bank proprietary trading rooms as clients for a number of years. I'm going to say probably 1992 when I left the brokerage business. That's when I went back. 1991 is I went back to the trading floor in the Pacific Options Exchange, and then I also started this service for trading rooms and big bank institutional trading rooms. And so it was big time on yield curve trades, all kinds of stuff. So I spent a lot of time in working with the bank, basically with their proprietary money and on the balance sheet stuff. I had another buddy of mine that we kind of did some things together back in the early 90s. And his expertise was in that area, but more on the balance sheet sides. And then I was just on yield curves, and I worked on the hedge side and hedging up bank pipelines for mortgages and other types of money that was flowing to get rid of any kind of balance sheet risk that was out there. And so so that's why I just ignore the 2-year. It really is not important. It's a retail number. It's something that somebody in the media, financial media, decided this was they wanted to work on that yield curve. This is, like I said, this is why when everybody was screaming there's a recession, inverted yield curve, it's, I forget what percentage they said it was always right. Well, it's not always right. And they tried to make it sound like it. And they got a bunch of folks listening that don't know. So everybody bought into it. And a lot of money got burned thinking there was a recession coming. So anyway, I think the Fed might move. I think I didn't even look at the Fed funds. That thing is so worthless as a predictor. Sometimes everybody's on that side, but I don't use any of that. I think they need to do this. I think they need 50 basis points, possibly 75 basis points this year. And the back end of the curve, the 10-year and all that is not going to move much. So that's kind of my position on the Fed this week. I'll update that over the next couple of days. I'll let you know tomorrow night if we're going to do maybe a Wednesday during the Fed meeting. We'll see if we can come on, maybe get up a little early and come up on the internet a little early, or maybe spend some time beyond that. Yeah, and then also somebody is mentioning you've got a lot of tech earnings. I don't think there's not going to be a lot of surprises there. There could be. I'll show you in a minute. We go through the algos. There's not a lot of volatility sitting around right now looking like it's going to come alive. It could, but if you're trading those individual stocks, they'll have a lot more meaning than I think to the broader markets at the moment. So let's do this. Let's go ahead and go to the database. We'll get through that. I'm going to go, since I spend like 30 minutes on all this other stuff, we'll start from here, and we'll roll right through the markets and the database. Let me get one more thing set up. We'll get over there. All right, let's go ahead and go. All right, so the database, we're now at 53.87. We got a little bit of a negative rotation today, but for the most part, it's not much. We've got 250 buys, and we had 415 or so, just estimating here. But one of the things we have 11 of the 12 sectors long. We have 71% of the groups are long from an index standpoint. And you can see down here of everything we've got on here, we only have on this column here, there's one that is negative out of everything here from a basically going from anything from basic materials, capital goods, everything is positive except for healthcare, and that's been long only a little bit. I think it's a bit over a week here. Yeah, 13 days, 2 weeks. So it's kind of flat. And these are the short-term models. And then we did get, the only thing that's flat right now is conglomerates, but everything's pretty positive here. And if you read through on the newsletter, and I'm talking about the rotation in the WaveTech database, you can see it's been really, really stable. 53% since we weren't on. Let me just go to the weekly here real quick. And you'll see weekly now is 66.78. And let's go to the all stats page. You can see here 83% of sectors on intermediate level, 68% on the groups, and 68.96, and we had a positive rotation. I set this up on the last Substack coming in for Friday morning that I thought we'd see some slight traction on the intermediate. We did get that. We got what, about, we'll call it 500 new buys and 200 sells. So we had a net 300 coming in, and they were both bullish rotations. You can see here. So, and from the standpoint, get a little bit different mix here. We've got one sector here. It's been long only 10 days. It normally holds 450 days, which is a year and a half. So that's a new one. We got another one. Let's see how many we've got here. Let me just summarize this. But we have most of the sectors that are in from a long standpoint right now are fairly new, and most of them are expected to hold anywhere from 170 days to as much as 300 to 400 days, and about 220, 240, right around there is 1 year. So we're looking at these sectors are long. They have a strong possibility, and this is what I've been talking about as far as all the metrics go of staying long for a while. So let me get moving a little quicker here. So now let's go back and go over to let's get back to see if I can get this to blow up here. I don't know how I got this screen to set up. Let me move this over a little bit so we can get over here. All right, so let's get over to ES. I'm going to put the market grid back up. So market grid is looking like you can see we have a slight upward bias. And this was something that I talked about. Let me get, I got candles up here because I wanted to show you that wick that was on silver. Yeah, none of my Whatever I did to this screen. Oh, okay. Yeah, I did something to this setup, so I'll just have to work within the context. But we're seeing some acceleration starting to come in. We've got a bit of a bottom forming here and a slight upward slope. We'll see a bit of an acceleration. I talked about this the other day as we come into the 1st of February. It looks like everything's trying to turn here. So we're in pretty good shape as far as the indexes go. And it's interesting because we're looking at a bit of a upward swing here, accelerating as the Fed comes in. I'm like I said, I'm betting they probably drop rates by 0.25% in this round. So we'll work on that. Let's go through NASDAQ is going to look similar in formation. You can see the red dots are projecting a bit of an acceleration and indicators all the way into next Tuesday, the 3rd of February. Everything except the PPM 1 and 2 look most positive, and your support levels are going to be here right at these moving averages, the 25,700 is really good support. Should be able to be playing off of those levels right now. Yeah, so there's no fib targets, nothing in here. There are downward targets, but not real big. I am really struggling with this setup. So let me come up on screen. I'm going to fix this. All right, here we go. Let me get back to the NASDAQ here. Yeah, so that we have some forecasts in here. 25,700 is actually right in that mode. Trying to get everything configured, folks. Sorry, I had everything jacked up for that silver presentation. So you can see a little better. Looks like we're going to stay and climb along the 10-period moving average. So I think this week is going to be fairly positive. Somebody mentioned the, the earnings coming up, and I don't see if this is going to be where the tech earnings are going to show up, if there's any negative pullback. Looks like we're maintaining pretty well within the market grid here. I don't see anything really changing from there. You can see, when's the last time? It's been since December, just double checking here. December, and then we did get a break and Tuesday, January 20th, where we went through the downside on the market grid. The market grid has been solid as far as exceeding it. So you should be able to trade within the market grid. Those moving averages are going to be solid support on ES as well as the NASDAQ. All that should be pretty locked in from the standpoint of where you're going to be trading. I don't see there's not any real spike of momentum spike until we get into out of first month of January. So I'll be talking about some things as we get toward the end of the week. Probably Thursday's broadcast, I'll bring up some things that we'll see how we're trading at that time and see whether they're relevant or not from that standpoint. But the bottom line is, it looks like normal volatility trading. A lot of times on the Fed, we will get a big spike, but I doubt it. Maybe if I'm right and they do drop rates, maybe we get a volatility spike where we trade outside the range, because we've only had, in the last, going back to October, it looks like we've only had 2 days that we've exceeded the market grid. That market grid's incredibly powerful for trading off of. I know several people inside the Discord that have talked to, I mean, like S3 and STX trades are almost always good trades, especially if you've got maybe an hourly chart or a shorter term chart to see some turnarounds coming in on the PPMs to trade off of. If they're starting to show where they're bottoming and you're trading in those values, there's usually pretty good trades, and it's in the center part of the daily period that the markets are open. Say you're not at the end of the day or the beginning of the day is really positive. So I brought up the 10-year. We'll go there next. Is we're trading down at the bottom end. It looks like the red dots are flat right as we come into Wednesday. Then they're projecting right now higher prices, but there's a conflict going here. You got PPM 1, 2, 3, and the 200 are all pretty flat to slightly down. So we could see, I think we just trade right around this 200-day moving average on the 10-year. And as I've been arguing for a while, we're right at 421 close today. The range, the extreme ranges are going to be 395, 440. We're going to hang around this 4.2 level. Even if they drop rates, you're not going to see much movement on the back end here. What we've seen in the past several times, we got Fed funds to come down. We actually saw the back end of the curve go up, which is exactly what I want. I believe it's what the Feds want. Fed has wanted for maybe a couple years. I don't see this back end of this curve changing at all. And they're a long ways from making housing through interest rates affordable. Yeah, I think I'm not sure. Somebody's working on a new formula for first-time buyers. I guarantee there's going to be a program within, I wouldn't say even the next 6 months, that is going to be maybe not through lower interest rates. Maybe we're going to get a new Fed around that time. But I don't think the back end of the curve is going to change much. And folks want it way lower. It doesn't. I argued this. I won't go into this scenario right now, but it's about structure of the market, not the value of the market more than anything. Is the programs that will be good for first-time buyers and those folks will be much better, easier to put out there if the front end of the curve is got that 75 to 125 basis point spread to the back end. I mean, a 30 years pushing almost 5%, a little bit under it, but it doesn't. That doesn't matter because no one uses that for much of anything other than maybe some investment. It has become a very bastard side length in the yield curve where it's not being used much. So anyway, this configuration is just not going to change. It's not really projecting crazy volatility except for coming into February. So I think we've got to get through January, and then we'll start to see some other movements. But this one is not going anywhere. I did talk about this real quick. I'll show you. We do have some Fibonacci projections you'll see up here. That is this is 440 where my cursor is right here, and this is 4.46. So there are higher projections, but when we come down here, we're not seeing any confirmation by expected increases in momentum to the upside, which would mean higher yields. We're just flatlined. And I'm seeing a lot of this type of action that's very flatlined from the standpoint of what expectations and what's likely to happen. So I think we come through this week and we'll get their earnings, tech earnings and Meta and all those guys. And all this stuff looks very, very stable to me. So I'm doing pretty good catching up with the analysis. Let's go to gold, which is another high flyer. Gold's got a whole different profile. I know the silver folks are all excited, and you hear a lot of talk about gold silver ratios. There were, if you do a bit of a study in history of those things, most of the time those ratios were forced upon the markets. There used to be a ratio that was actually basically, we'll call it written in code, but written in the law and how gold and silver were interacting. But for the most time, it's been floating, and I don't think there's much of an argument for those things really affecting markets right now. But the gold has still got these upper projections. I thought we were going to fade off here. So this comes in going back to January 9th. So this is the daily. We got projections for gold to go to 48.70, 50.95, and 52.23. So yesterday we hit 51.07. So we satisfied fib target 2 has been satisfied, and now there's one last one there at 52.33. And you can see what's happening here is momentum. The red dots are kind of flat rolling over. It looks like they want to challenge this 10-period moving average. The projection, that turning point's right pretty much where we are trading right now at the 50.37 level. We could continue, but we're seeing the market grid trying to turn over. We'll see how it plays out. And we've got that element that I talked to you folks a lot about where let me draw this in. It's this bubble that we get. So the market grid gets spread out, and what should start to happen is we're going to see the market grid move like I'm drawing it into. Should come in. We could poke out of the top end of this, but chances are we're going to see a contraction in the market grid. We had a couple in this last 6-day sequence. We had an expansion of volatility on this last run, and typically we'll get a contraction back in, just like what you're seeing right here. We got one here, we got one here, and we're probably getting a minor one here where the grid starts to collapse in, and you have to normalize where it narrows in. Once it narrows in, then you can make next directional move. So it looks like we could spend the next, we'll say, 3 to 8 sessions in basically a consolidation. I think gold prices are going to be driven by what we see happen with that big wick that got blown up. Basically, silver got blown up today, and how it acts. So go back once again, go back to that Substack and read down. I think it's the very bottom. It says what to expect after the top was in. So I'm not saying it is, but if it was today, that's where those rules are going to come into play on what to expect, how the market action, and this is silver I'm talking about, will unfold. I believe that action that we see there will basically affect this sentiment in gold as well. So we'll see what comes out of there. You can see the algos are all showing loss of momentum. See, this thing is so powerful. Even after we break the first and second derivative, you're still and a positive slope. And that's why you're seeing, let me pull this down. That's why you're still seeing this angle of attack is still being presented. And let me just show you something. I'm going to pop this up real quick because it's in there. It's up at the top. Sorry. Things are, there it is. So this is what we're seeing here is kind of we're in the inflection. We're on this red line. This is all an expanded. And in that article I have this is the special report. I describe what these things are doing in there. And especially, and then I went through a multi-time analysis. Whenever you're looking at a market that is, just trying to find where it was here. I got too many tabs. That's one of my issues. Here we go. What happens with those PPMs based on, so the PPMs, the four of them, one tracks the 10 period moving average, 21, 40, and the 200. So when these projections, this is the algos projecting what the moving averages are telling us. So the fact that we'll get this rising moving average, I was just showing you that contraction. We should, once the moving average catches up with price, whether price goes sideways, moving average is still projecting decent trend levels, so that it's going to continue to catch up. So next time we get maybe a bounce off the 10, or depending on what kind of price action we get here. Like I said, I'm convinced that silver is going to be the driver of sentiment in gold and the whole complex at the moment. So we'll see what we get out of the next couple of days. So folks have been wanting me to cover silver. I'll probably throw at least a market sheet into the newsletter tonight as well, just to have it in there. Okay, so I'll throw the daily sheets there. So last but not least, let's go to Bitcoin. Yeah, boy, I'm right on target. So I did a good job catching up. So Bitcoin continues to, I'm trying to see what was the lowest price we got to. We got to 86,422. I've been telling this 83,800 is the magic number. You break that, you're probably going to make a new low below 80 and other numbers. Right now we have upward and downward projections. We have fib targets up. Let me bring that up there. So we got low targets 87, 83, 768. That's the 83.8 number. And then 81,000 on the upside, 95.2, 99, and back to 101.9, so 102. I think we're going to stay in the sideways mode. We are seeing the PPMs projecting a bit more positive flow coming into Bitcoin. I don't think it breaks down here. It just has continued, and you'd have to argue it's then built a pretty substantial base here going back to when we were in that deep decline going all the way back into right before Thanksgiving at November 21st. So we built a decent base. You can kind of tell when the cheering gets really loud that we're probably close to the top. It's kind of neutral right now, but once again, everything that we're looking at is flatlined at the moment. Doesn't look like there's any big volatility surprises. Certainly something could happen always, right? Yeah, but right now it's not forecasting any of that. It's just forecasting kind of normalization. If you have the indicators and you can get to having the market grid, then that will help you to do that. I guess you could get the newsletter, and the fact sheets that are in the newsletter should put out some pretty good parameters. And typically there's at least one, if not two, trading opportunities in those sheets every time they come out. So there's that too. For $8 a month, it's kind of tough to beat. Anyway, that's how it looks like we're set up here. So let's finish the show. I'll go and answer questions for the next 5 minutes. Let me see what you folks are talking about. Yeah, okay, good question, Ted. It's not a dumb question. It's actually a really good one. When you say sector has a duration of 400, so the database that you're looking at has uh, been used for almost 4 decades. So what we know, let me show you. Let's go back there. I'll show you. So we go to the database, you'll see this. It shows 173, 162. This one's long. Here's one, 10 days of 451. So what we have is every trade that has been signaled within this platform has a map for every trade. How long a weekly trade, daily trade. We actually, in Portfolio Expert, have monthly trades that come in. Some of those are last trades are on for 10, 14, 15 years plus on certain symbols. But so it's a map of what normally happens. You know what? Let me so I'm going to go back on here 1 second here. Let me come back up. So this is what's out there. So we have a map for every symbol, every sector, everything in this database. So what it tells us, current trade is 62 days, 146 is the mean. So duration mean is 146. That's 62 of 146. Projected duration is 261 days. So in a symbol that I picked up, it normally will go into a trade and will stay long for over a year. This is a weekly intermediate trade. We know what the returns are. Projected profit on this is, what did I pick? Yeah, so there's basic materials. Average profit during that 261 days is 54%. So if you get a signal on here, typically it will hold for that. That's the normal profit. Projected profit standard deviation, and then there's the average loss. So it makes 54 on average. It loses minus 8.5%. And so you can see all of these trade stats. So this is the most difficult thing for anyone that gets into that platform, because you're quant. You even believe these numbers, you buy in or you don't. And if you don't, you're going to mess it up. But if you play into the statistics, so all 14,600, every index, every sector, every group, everything has a map like this. And so you kind of go in knowing what it normally does. Doesn't mean it has to, but it also, I wish I hadn't closed that, also gives you the percent of the time that it's right. So you know the validity of the trade and how long. You know everything going in, what it normally does, so you can build good quality expectations. And it's been around, so a lot of these things will have hundreds of trades on them. So it's very, if you get into data science or anything, what happens is once you get enough transactions and you have the stats, then you have normalized the data and you can start to rely more and more on the expectations. And so that in theory, for me, it works because I built this stuff, but it's a black box, but it's a black box that gives and builds all the expectations for you. So you can have the confidence to kind of stick your head in the sand and let it run until it yells at you and tells you to get out or get in. So that the whole thing was based on, we were in a Discord room talking the other day, somebody was on there, and this is what I was trying to explain, is that once you know what the expectations are, there's something we call ER, which is effectiveness ratio. So there's an ER if it's above 100. If it's 200 plus, the ER, the validity or the probability of it actually generating something that looks close to that map as far as expectations becomes higher and higher probabilities and higher confidence levels. And every symbol in our database has ER ratios, has all these stats. It shows you 100% of the expectations. You can go in and see every trade that's ever been generated. And one of the things I tell people to watch for is like consecutive winners and losers. Once you get, typically it might get 2 losers, 3 losers in a row. They're typically very small into the ratio. So I could go on a lot, but that's what the confidence is on WaveTech, because you're a portfolio manager when you're using this product. You're not a speculator. You can use it as a speculator tool, but that's not how it was designed. It was designed to be, the original name of this product was the Virtual Portfolio Manager, VPM. That's why if you look at the URL, it says VPM2. And so everything that I did back in the olden days, we'll say decades ago, was around the VPM thing. But good question, not a dumb one. Yeah, I'm going to teach you guys a lot of stuff. That's the plan going forward. Yeah, thanks. Yeah, I hope a lot of people read that. I think I saw maybe 3,500 views the last time I looked on that. Yeah, I think you're right. The crypto bros are streaming. They don't have the attention span for this. Move on. Exactly. Please leave us. Yeah. And you're talking to a guy that's ADHD. So it's kind of funny. Yeah, Mr. T, that's awesome. It was so timely, as it turns out. Yeah, so interesting. Was it NAD ELOV 24? This is why this article that I wrote is so important. We could spend hours on just doing analysis of those curves, because that's one of the, when the regime breaks out of the normal stuff that I've been showing you, market grid, PPMs, moving averages, when you go vertical, none of those things matter. It's a whole new set of rules. And it's a skill if you learn how to interpret and at least know that you're no longer in the normal rule system. I don't care what you're using, whether you're using, exponential weighted, VWAR, doesn't matter. None of that stuff applies when the market goes vertical and it separates from everything you know. And that's what that article is really about if you read through it. Just so happened I used silver was in a position to really rock it. I didn't know it was going to be the day that I put it out, and 6 hours later this thing, prints 117. It was what, 107 maybe when I was writing that last night. So my point is, and this is the thing where there's no, if you haven't been around forever like me, I'm an old fossil, right? If you haven't been around and you haven't seen this regime change from everything becomes totally not useful. And then you're trying to apply that not useful knowledge that you have in that regime when you're in that parabolic curve. One of the things I said, I think on a tweet the other day, when you get in those, you just pick a point and get out. Take profits if you're in it, right? Just figure out where you want to take it. Leave on your own rules, not on the market rules, because if you overstay, gravity takes over and you'll just be scrambling along with everybody else. Was talking to somebody earlier, and I don't know if any of you folks can confirm this, but the dealers, the people that are selling silver, coin dealers, whomever, I said the one thing you want to watch for this market as well is what the spreads are. And the person I was talking to said that you can't sell your silver. You can buy silver, but no one wants to buy it. So you don't have a healthy market. That's another sign. You need a two-sided market. It needs to be liquid, and because what that tells you is the dealers don't want to buy it back. They don't, they're not even. Some of them are just taken off where the bid side of the market. They'll sell it to you, but they're not willing to take in inventory. That's always a really bad sign. I don't care if I spent a lot of years in bonds, and back in the old days when they called it over-the-counter market, which is still over-the-counter market, but all NASDAQ stuff was like over-the-counter. So to sell a stock, you had to call on a phone and call a trading desk to sell, whether you were at a broker-dealer, that's how they were going to move stock. And the old joke was you'd call some of these dealers and the phone would just ring and ring and ring. They weren't answering the phone. So it's interesting. Sorry about that. It's interesting to watch some of that. Yeah, I don't know, the government shutdown. It's not really, I don't know what they're going to do. I don't think they want to go down that trail again. I'm not sure. There's going to be a lot of finger pointing. Want to see a couple more things. Yeah, I guess, I don't know, Iron Trader, appreciate you being here. That's pretty basic stuff. I think I learned that about 43 years ago. Let's see here. Yeah, I'm not sure about the carry trade and its validity at the moment. I see somebody asking about that. I'm not sure what's going on at the moment on that. I don't think it's as significant as it has been, and Todd, you're probably right. Dealers on silver are going to margin call. And if you read that special report, I talked about the leverage players. I'm telling you, when these things come apart, it's just going to be a vertical drop. Not saying we're there, we could be, but we're very close to the regime trying to get back to what I talk a lot to a normalization, which it wants to live in the world that we talk about every day here. It wants to live around the moving averages, the PPMs, the normal volatility, AKA the market grid. It wants to live there. That's where markets are functioning normal. There's a nice two-sided market. When you get to that big blow up and go into that parabola type regime, forget it. None of that, like I said, nothing matters. And it operates on an entire different set of rules. What it wants to do is get normalized and get back into that normal regime that everything usually moves in. And that's where people get, you stay one day too long on one of those markets, and the way you won't be getting out on your terms. You'll be getting out on the market terms, because there'll be no liquidity on the way down. and you folks have heard me talk about that. Uh, you'd be lucky if you can get short some futures or SLV, some of these ETFs and other things are out there. It can get very illiquid, and these guys have the same issue we all have if you're running an ETF. So sometimes it can complicate things. I had a situation once upon a time when they first started to raise interest rates. I had a hedge on for a family member to hedge up their municipal bonds, and the inverse fund that I was using, the rates went up so fast that they blew up the ETF, and it was a major bank that was running this thing. I thought it was pretty safe. It was not, and it ended up to cost a lot of money because they literally had to close down the fund. It just those big fast expansions, and they weren't very apologetic. The way they settled that was not good. It was a London bank that had written this ETF. So yeah, is TLT going? I don't know if that's something I'll look into. A couple more. What we got? We're a bit after, but I don't know. Iron Trader, Wall Street. I don't know how old you are, but most of this stuff you guys have read about, I lived through. Yeah. Yeah, and that was an interesting scenario talking about. But in the last, so I'll say this because the Hunt brothers are dead. Okay, I can't find my old buddy, but I won't mention any names other than the Hunts. But I can tell you some of what's gone on with silver is very similar to what the Hunts did, and I knew the guy that designed the trading program. He was at Drexel back in the old days. Most of you never heard that name. But they pulled the liquidity. They were doing the illusion, some of the illusion, and maybe that's real this time, that the silver stocks were disappearing off COMEX. And they were, because they were pulling off, the Hunts were buying the cash and having it shipped. And they had done a deal with a Saudi group and guaranteeing them a profit on every ounce of silver that they bought. And there was literally a 747 leaving New York City every day, flying to Saudi Arabia to dump this silver off as much as they could put on that airplane. And then, who knows, there might have been a couple, but I know there was one. As this friend of mine, I met this friend on COMEX in 1980, I think it was, is when I met him. I was not trading with him when that 79 thing. I heard the story sitting on his porch in California, hearing this story, the behind the scenes story. So it was what the exchange did is they basically went to liquidate only. So you couldn't buy any new silver, you could only sell. So which way did the price go? It went way back down, it collapsed. And so I don't think that could happen again today, but certainly I remember, what was it, the nickel situation in London a number of years ago. I just flashed back on the flash crash on the E-minis, going back to, what was it May 10th of 2010? I saw some things there where they erased trades like they never happened. They also did that on the nickel, and I've seen this happen before, where the exchange will survive if even they have to make up rules or freeze markets. They'll do whatever they have to do to survive. And always say you can kind of fight against the system until the system starts to break, and then they're going to take control. So I don't know. That's some of the dangers right now, and I've talked about this. I'm trying not. I'm 15 minutes over now. Well, it's actually I'm about right here because we started 10 after. So the reality is that we have so many traders in the markets now compared to what was once. It's not even fair, and we have a lot of highly emotional people. I know I've been picking on for the last several weeks the millennials, but they overreact to everything. Everything. All you do is go on TikTok, and everything's a disaster or it's euphoria, and there's not much in between, and it's really easy to trigger these emotions. And we've seen it over the years, and now they are the primary group, and growing so every minute that we talk into the folks that are throwing orders in and out of the markets. And we also have something else different. Everything was in slow motion, like super slow motion back in the days. I'm talking about certainly in the 80s and all that, compared to being digitized and everybody having instant access to the exchange at a click of a mouse, and literally, just billions and billions of dollars can flip in a moment. So we live in a much different way. It's amazing that we haven't had more of those situations that seem to be somewhat convenient that we had when CME shut down on the E-minis. What was it, a month and a half ago or so? I'm shocked that more of that doesn't happen. And great cover, a data center, right? So anyway, we could go on a lot about this, but remind me if you're on here. I think it's test. Let me look. It's pretty tiny. 1 second here. Ted 07, Ted T 07. Bring up that. I'll try to make a note here of the taking a look at TLT. I wish I had seen that earlier. I would do that. So if you have the indicators, you can put a monthly or weekly chart. See what the algos are projecting. Look at the WTARs, and you can go from there. And if you don't have the indicators, kendallreport.com/indicators plural, and you should be able to get there and find out a little bit more if you want to get access to those. Yeah, I think it was a unique line that I threw out on the silver futures. I think on that special report. I'm just trying to see if I can. I love this thing. Yeah, it's amazing. Yeah, I said this. The comment was, because when the bid disappears, it disappears all at once, and gravity does not negotiate. And that's what I'm trying to tell you. Once this happens and you're too late, you're not getting out on your terms, you're getting out on the market terms. And if you sit there and think, well, it's going to get a bounce, that's where they really can stack up some bad stuff there. So anyway, folks, enjoyed it today. I love having these discussions at the end, and let me just look. Yeah, so one of the things on the annual report that I'm working at, and last year I had this out at the end of December. This week it's going to be the end of January, but I like this because one of the things that I mentioned the other day is actually building a portfolio, and at least once a week, maybe doing a review of the portfolio we're going to build. And I'm trying to figure out how I'm going to do this. The best way is people that, if you're doing stocks and having a discussion, we might do maybe almost like a large event, maybe on Zoom or something, where a bunch of us can get on and talk and maybe have a way to collect symbols and do some research. Because I showed you the miners portfolio we built in. I used to do a live trading room several years ago, and we built the miners. We were talking mining stocks and how they lagged and hadn't moved. And I've been bullish on gold for multiple years. And the result of that was, we thought, hey, let's build the miners. They always seem to lag. And I'm not sure, because I actually built and ran a hedge desk for mining companies to hedge it was primarily gold, a little silver, but mostly gold. But one of the reasons why the miners normally don't move with the metal is because they're always selling forward all of their inventory, not in futures necessarily, but they always forward sell everything to the people they do business with, and it makes it cheaper for them. They get a little markup premium, and they never get advantage of owning the metal that they mine on a large scale. So, we have seen a pretty parabolic move. So maybe things moved fast enough they couldn't forward sell, or they actually finally did what we used to tell them is don't sell, don't sell all the inventory, sell a percentage, and then keep the operations flowing like you do. And then, because when you're in an uptrend, you want to get advantage of those, of that appreciation of the metal, and they just don't do that. So this was 1992 when we ran that hedge desk. I built it with three guys that worked for me at the time, and we started soliciting them. When I started in 1980, I helped. Wasn't me. I worked on a hedge desk for banks, and we started cold calling banks and trying to get them to hedge their inventories and stuff like that. So I had that experience, and we did that on the metals. And I was recruiting some guys that ran a big book for Chevron, and we were going to try to build an oil desk as well. But you learn a lot of the characteristics from these type of players when you're with them, because you find out how they think, or how management is telling their traders to think and what to do with the metals. So that was a big insight. But we built a really solid portfolio, and probably should maybe have that out there. So I would like to have maybe one day a week that what we did was talk portfolio management and things of that sort. I've potentially reconnected with a guy that worked for me for 7 years, and we're talking about maybe doing some of those things. So it'll be kind of interesting to see how all that plays out. Okay, good to hear that, Iron Trader. Appreciate that knowledge. Yeah, so, Piper, I started also when you called in orders. So, 1979, I remember the volume on the exchange. If you did 40 million, that was a big day. That was like a giant day. Yeah. Yeah, I have lived through a lot of stuff that only you guys have done. That's funny. Um, Andrew, Nice to see you there. Just looking. Yeah, I don't know. Like I said, when you're in these, it's a silver question. Would you sell silver? I would, if I'm long this stuff. I'm not. I do have gold positions, but I don't have silver. I have it's really tough. I think there's a complete difference markets, gold and silver. But I this is all my only advice that I will give on that is I would look at where you are and you need to, like I said, exit that market if you want to exit on your own terms. Don't let the markets force your hand because if they do get into after a parabolic curve like we're in right now, if they do decide to sell off, they're you're going to be getting out on what they offer you. I'm just looking at something here real quick. I want to. Bear with me. I just want to, on that question, I want to answer it, then we'll call it quits. So it's interesting. This is exactly what should be happening. I'll just put it up here. Silver's bouncing back right now. It's up 7%. This is that, whether this, how this market, this is what I was saying earlier, how it finishes is going to be really important. We're trading back up toward the high end of RTX right now. That value is 113.7, and right now you're high 111.275, and this is what you need. So you get that first big wick and that big just washout. If you don't get this, what we're seeing right now, if it fades and ends up lower on the session, and it looks like, let me just check something here. Yeah, so we have not made a new low from the big wick, the big reversal. We've stayed above that low, and now we're responding, and we're getting close to that top end of the market grid again. So this is actually a healthy sign that was probably not a high print. Like I said, probably between 120, 125. If we get up here, we don't make a new high, get another rejection, then we're going to get closer. If you go through that special report, I laid out, I think, 5 or 6 markers to watch for. And like I said, the only thing you can do with a trade like this, the WaveTech models bought at basically below $30. It's still long. That thing's going to stay, it's going to take weeks before that gets out. This trend is very alive. We're just at that extreme level. And what we need to do is get that normalization I talked about. So there could be a lot more in this market. It's not, those are just the numbers off the algorithms and everything that are in daily, weekly, monthly charts. So this is actually a really good sign that it's rebounding as hard as it is. But at the end, it's going to be the close and the next couple sessions. If we can print through that high, then it will negate that reversal. And like I showed you earlier, and it's on the screen here, you can see what it's projecting here is this still this vertical move. And if we start to look here, it doesn't even start to roll over till 170. So I wouldn't be too quick like I said, you just got to look at this thing, watch it very closely, watch for the markers to show up. These are impossible. Nobody can call this thing. Not me, not anyone. Because when you get in, this thing could be on a tear to 200. Some of the stuff and research I was doing, anything's possible, and because of how this parabolic curve is setting up, there's no way to determine the end of this thing. It's throwing darts, and you have to decide, whatever you're doing. I'm gonna sell if it prints 125. You sell at 125 and it goes to 160. You're gonna feel like crap, but you're still, like from the position that we have in our modeling, it's going to stay with this thing. I'm telling you, we're 6, 8+ weeks on the model selling, but that might be the model selling at 75. It might not be necessarily. I'm not telling you that because the models aren't going to sell for multiple weeks. It's just that everything's trying to catch up to get back into the normalized regime that I was talking to you about. So, you can see the projection of this thing is ridiculous. I've been showing you the same projection on the weekly chart on gold for 2 years. It was projecting $5,000-$6,000 2 years ago if you run this thing out like this. So I'm not calling tops. It's really about looking for those markers. And if you see all the markers and you stay beyond that and it collapses and you're chasing an exit, then that happens. But there's no way, not me, not anyone, not the indicators. What this is saying is that there's a lot more. Look at the red dots. They're just showing staying above the 10-period moving average. This is a daily COMEX silver continuous chart. So, there's no forecast here. If I bring up the indicators, this is what I'm showing you. It's showing a loss of momentum. But you see if you see my cursor over here, just real quick, all the way over here, what's being projected going out into March is that the PPM1 is still at a plus, okay, plus 0.57, which is double the minimum trend to stay above that 10-period moving average. So even though you see this declining, all that's happening, we've gotten into this parabolic curve level. It's at right now at 2.27, and it was up at almost 3. All it's telling you is it's dropping off some of that parabolic move. Doesn't tell you that it's topping out. All it's telling right now is that we're still going to stay in this trend, and it'll be interesting to see how the classic. Sorry, I dropped something on my keyboard. How the classic is going to be. How this classic trend plays out. That's what we're going to know from the wave tech models. That's when it's all over, we'll go back in hindsight, it did a good job. You could have done it better, just throwing a dart, but there's no indication that there's a top. Yesterday's wick was one of a couple markers that are there, but you still don't, when I look at this, I'm not feeling compelled to sell. But I think ultimately, if you're in this trade, there's an old saying, and I'm going to close here. An old saying, a buddy of mine came up with this: never celebrate a trade. So I worked on when I was on the Pacific Options Exchange. It wasn't his real name, but Artie used to always say, you better sell something, because if the market gods think you're still in, they'll just take the market down. So sell little pieces on the way up and keep selling them and make them think you're getting out. And then because if you just get out, then it goes vertical again. If you stay in, it goes down. So you can't win. So you just have to come up with something that you're happy with if you made on this trade. And remember, this is my main advice after trading. I've done a lot of transactions, is there's another trade. This is just that. It's a trade. It's one trade. And, you know, and I think some of the mentality, like I said, I've been beating up a little bit on the millennials, but it's, you know, to the moon, you got to huddle, and you just got to stay in. You can't get out. You got to believe. Trading under ideology is not going to work. And um, I'm just hoping that the millennials get the lesson early. I want a trade that a lot of people are in that just fail and get hammered. It's just one trade. If you put all your apples, your eggs in one basket, however you want to do it, and you get wiped out, that's on you. But if you need a trade, you guys need a trade if you're listening, that actually goes down and does not come back for like 10 years. And whether that's Bitcoin or not, I don't know. But these kind of trades, you just pick a point and take it, you know, and that's a lot of times when you have if you have a big size trade on, just day trading, I mean, you can leave a lot of money on the table having a big trade on and getting out early. But I always look at it, I'm goal set when I'm trying to trade. I've set a goal for that trade where at least half of it's going. You know, you need to be downsizing risk on the way up. One of my mentors, you say by the time it gets anywhere close to where you thought it was going, you shouldn't own it anymore. You should just be selling into it. So you got to look through, and if you've been trading for a while, like one person has been trading for, sounds like as long as I have, you just figure out things and you do them and you don't look back, especially the profitable trades. It's good. The ones that kill you are, you know, what was it JP Morgan said? I always got out early, and that's okay. And just remember, if it's a trade, if you got all your net worth in silver, then, you know, you'll figure it out. I don't know what to do with that. But like I said, when I look at everything, I don't see a climactic end just yet. Let me just see where we are now. Yeah, see, we're up 6.7. Actually, up, plus 6.56%. So this is the perfect bounce. And there's a description in this right here that talks about, I think it's right. Oh, here it is. What happens after the top? That section you should read. And then look for markers, go through this. I laid this out really good. It came out exceptionally well from when I started writing it. And we still haven't had the parabolic slope break. We haven't had that. That's what I was just showing you. So, yeah, high probability top makers to watch. Just go through this. You could probably do a little more research. I tried to keep it down. I think it still ended up at 3,500 words. So just that's my recommendation from that standpoint. Man, I'm having too much fun hanging with you folks tonight. Okay, folks, looks like that's going to be it. Sorry, I'm trying to zoom in, and for some reason, another fun Apple moment. Just trying to read this one comment. It's like 4-point type on my screen. Yeah, somebody's asking what's the subscription levels for portfolio. Yeah, there's just one. It's $97 a month for WaveTech, and I'm about to start releasing some Claude scripts to enhance that product without having to rebuild it. But yeah, so we're going to start doing some stuff on portfolio management. It's fun to speculate, but it's way easier to truly diversify. And it's not a pie chart that we put together. It's actually, it trades every symbol individually within the portfolio, and it gives you allocation, how much to buy, when to buy and sell, all that stuff. So we'll get into that. That's going to happen here pretty soon. Anyway, all right, I'm done. I'm trying to read these. We could go on hour 40. So yeah, we've been a long time, a marathon. Anyway, folks, thanks for watching. I will see you tomorrow night. Have a great evening.